might take a bit, but yeah.
It normally shows it for me when it's scheduled.
Yeah, I've had that issue with other people's as well. For some reason, it just takes a while. I don't know why.
Yeah.
Yeah. Oh, there it is. Okay, I see it now. For some reason, it
Yeah.
just takes. Oops. Okay, let me see if I can share this.
All right. Cool.
Are we live now?
Yeah.
Okay, gotcha.
I was just waiting.
Let's see here.
So today we have on Dave. He has a YouTube channel, and he is, uh, I think, getting ready to retire, sort of, kind of soon. I'm sure he'll talk about that some. But if you just want to sort of introduce yourself, and I guess you can say whatever you want. But
Yeah. Just trying to finish the share here. Community. Join me. All right. Let's see if that works. All right. Yeah. Okay. I got you shared out there. It might be a little bit of crowd. Okay.
cool.
You got Ryan Delinger show. Yeah, my name's Dave. Not late, mid 40s. And what else am I going to share? I got a YouTube channel. I've been running it since middle of 2019, so it's been a little over 2 years. This year will be 3 years coming up. So, as you know, Frank, it's a tough game. YouTube.
Yeah.
Just hit 10K subscribers, which that's
Yeah, I saw
a
that.
um, really just one video a week. Really is all I've been doing. Um, Originally, kind of got inspired by Graham Stephan. Like, if this young little kid that really doesn't know shit can do this, I can do the same thing. I have way more experience than he has. Rentals, I mean, the whole 9 yards, right? Because I've done rentals as well. But so I'm like, let me give this a try. And then I put my first video out, and it's like one view, way harder than I thought. Like, I just thought the algorithms would just pick it up, and no, it doesn't work like that.
Yeah,
So,
it's time
you
for
know,
sure.
I originally started the channel out with kind of some rental stuff in there. And then I transitioned out of rentals finally after a decade of doing rentals. Glad to be out of rentals and in pretty much mostly stocks. There is some mm, real estate notes I'm still doing until those get transitioned out. Um, what else have I been doing? I've kind of have a lot of background when it comes to just investing in general, but what got me, I don't want to go like answer all your questions off the get go. So you can kind of ask me some specific questions, but the fire journey and as far as retiring, I've already put my notice in my job. Got about 44 days left until my last day, and it was a long journey to get here. I found fire in 2014 is the first kind of when I first heard that term. So that's relatively short, but I had a
Yeah.
net worth of zero in 2010, right? Before 2010, I had a net worth of minus 80K or something like that, right? Because I had a couple of cars, I had student loans, the whole 9 yards, just like everybody else has, right? And then I finally got rid of a car and then went overseas, worked over there, and paid off debt. And then 2014, I found fire, and that's when I really started to step stuff up with a savings rate of like 60 to 70% of take home pay. Not talking about 401k. That's not in there. I mean, I really was on a fast track to fire, and that's the key. I end up going from 2010 to 2017, hitting the first million, right? So 7 years there from zero to 2017. Nothing fancy, right? I don't have a business. I don't run a business. Well, I am YouTube now, but it was a W-2 income, right? So,
Yeah.
most people in order to get like to the $5 to $10 million mark, especially if it's a double digit millionaire, you normally have to start a business to get there, right?
Yeah.
It's very tough to get there on a W-2 income because you're going to be taxed like the most, right? So looks like I'm going to be short hitting my $2 million goal prior to me retiring because of the market, right? So that was my goal, but it is what it is. So that's kind of a background. I mean, you can ask me more questions if you want. I can answer like more
Yeah.
specific on those questions.
Yeah. So the first thing I'm normally interested in is like how you got into investing and um, being interested in your personal finances, I guess, and stuff like that. And like when you first got started, like did you have goals and, how has that changed over time?
Well, it's a good question. I think that's a very important question to ask people too. So in like 2001 ish, my mom had read Rich Dad Poor Dad.
I'm
So
sorry, that's when I was born.
yeah, she let me borrow it, and that's saying something for me because I think in my entire life I've read like 3 books. That was one of them. So I'm not a book reader. I don't get inspired by books or anything like that. That's why it's kind of funny when people say, "Oh, what books have you read?" And it's like, well, I mean, YouTube videos work just as well, right?
Yeah.
So yeah, I would have to say that's a very good read. It's an easy read. You've read it. It's an
Yeah.
easy read, and for somebody with my, you know, I actually have a pretty high IQ considering for me, but um, I just for somebody like me that's not good at reading, had reading comprehension issues like that, it was a good read. I'm glad I read it. I've read it a couple of times, and that book kind of set the motion right for just thinking differently, right? So I think that's the key there. Even before that, my brother and I we were kind of like trying to do this, trying to do that, trying to get interested in real estate and stuff. I had no money back then. I had, zero money. When you're in your 20s, you're an exception. You're an exception, Frank. I had no money. I spent everything I made. Always had money. Always had stuff on a credit card because I had an obsession with speeding with cars and just fixing cars up, right? So all my money went to the cars, and I'm looking back. I mean, I probably, obviously looking back, saying, "Oh, I wish I would have invested." Yeah, well, I would have missed
Yeah.
out on all that good stuff that I did back then too. So that kind of set the things going forward. I didn't actually first start in investing on my own in my own brokerage account until roughly about 2001, 2002. My very first investment, I believe, was Cisco Systems. Obviously invested in a 401k and all that in the late 90s and stuff, but I mean, you don't care about that because you think you have all the time in the world. So except you're different. I don't know what, somebody should be interviewing you.
Yeah. I mean, I guess for me, it's just like, I feel like there's a lot of ways to kind of go about it. And like a lot of people, definitely when they're younger, definitely like people around me are, I guess they use not an excuse, but their reason for like not being as focused on their finances is they're just like living their life and just like kind of going along with everyone else. And like even like the little stuff, like you're friends with people in college and you want to hang out, so you go to a restaurant and like ends up being like 20 or 30 bucks, and that kind of stuff adds up quickly. And I think people don't realize that kind of stuff,
I
how much
wasn't
that can
a
affect
partier.
them.
I didn't really start partying until my mid 20s. I was making pretty good money back then. Actually, I've always made pretty good money, even right out of high school. So I mean, that's kind of a little lucky there. 16, 20 bucks an hour at like 19, 20 years old. So, and I mean, back that we're talking about like the late 90s, right?
Yeah.
But my very first job, Burger King, $4.25 an hour. So, uh, I didn't ever, I mean, like I said, I spent all my money on my car. That's where all the money went. Didn't matter. And then I went in the military at age 27. and you don't get paid jack in there. So I didn't really start making money, and I don't even know what you consider making money these days, or back then, So I make good money now, so I mean that's definitely helped. Um, I mean, as far as investing, I'm not one of those people that can say, "Oh, I got in PayPal back in 2000," because I used to use
Yeah.
PayPal back in like 2000 on eBay, right? So I'm not one of those people. I never really hit it big in any stock I've ever invested in. I've always been in there and then got rid of it, and been in there and got rid of it. And to this day, could you invest in something and let it grow to $2 million? No, no way. I'm going to be out of there the first 30%, or
Yeah,
20%.
exactly.
But that's just me. I'm more
Exactly.
about capital preservation these days than growth, right? I want growth, but I worry more about capital preservation, cash flow, and growth. So I care about those three things, but not in that order. I care about income, capital preservation, and then growth. That's kind of I would say, the order for me.
Yeah, what's your like were you originally back in the day were you just investing in like individual stocks and um kind
So
of
with
like
401k, it
were
was
you like trying to hold long term or like trade in and out or what were
so
you
with
kind of doing
401k,
there?
it was just like normal. I think it was Vanguard back then. It was just normal indexes and stuff. Actually, it was mutual funds, believe it or not. If everybody knows what mutual funds are, right? So ETFs really weren't a thing. T. Rowe Price, the whole 9 yards. Janus is another one. You might have heard of them. So when it came to my individual brokerage account, it was individual stocks. Cisco, right? Now I got caught in like the dot com went dot gone, era, right? So I don't remember if I ever made money on Cisco or not, or took a profit on it or not. But there's a lot of stocks in like 2000, 2001 that have never reached. 20 years later, have never reached that number.
Yeah,
I think
Cisco
Cisco
is one
might
of
be
them.
one of them.
Yeah. Because I remember I think someone was like I don't know if it was on one of my videos or something when I was talking about Cisco and they were saying how it was like a crappy investment or something because they haven't reached the like all-time highs for the last 20 years or something. But
Yeah, my previous company, which is no longer on the exchange, I don't think they ever reached their number back in like 2000. So,
yeah, it's kind of
yeah, Cisco,
interesting.
I believe, is one of them as well, for sure.
Yeah.
Cisco, like the CSCO, not the SYY.
Yeah, yeah, yeah. Did you invest in PG&E?
I did.
Okay.
20, 2016, 2017, maybe somewhere right around there when all the fires and all that became an issue. It might have been 2017. Yeah, I got hurt pretty bad in AT&T. I took like a 7K loss, I think, in it. And I mean, I'm out on stock twats on stock twits. So I call it stock twats, but saying I'll never get rid of it. And it's like some guy looked me up like 2 years later and starts busting my balls and stuff. You said you were never going to get rid of it. So I mean, it made sense. I mean, something changed, right? They get rid of the dividend, or they look like they're going to be go bankrupt. Then yeah, I'm out later. So yeah, I took a big loss on it. I grew up in California, so I know PG&E, right?
Yeah, that makes sense. Yeah, I mean that's like a I forget. I don't even know what it's called. Edison, I think Ohio Edison. I think they're on the market. I don't know. There's a few utilities from around here that are on the market. I think, but yeah,
Yeah, Duke. Well, yeah, Con Ed, right? So PG&E is it's known to have issues. The Hinkley incident. They made a movie on it, right? I mean, there's they probably will never go bankrupt, and if they did, it probably just taken over by the state or whatever. So they kind of just keep getting bailed out, right? But the stock
yeah,
definitely gets hurt. So yeah, I'll probably never invest in that company ever again. Yeah, I like Duke, or I like SO, right? I mean, there's some good ones out there. NEE, right? Those are better ones, better choices.
yeah. So I guess now you most of your investments are more in like uh, sort of like ETFs, right? So,
I'm all over the place. I got individual
uh,
stocks. I have ETFs. I have longer ETFs. I have income ETFs, right? Last couple of videos I made, I changed my strategy a lot, but it's just because I'm trying to figure out what works best for me, right? And I
yeah,
talk about why I'm doing what I'm doing, but I wanted to have income. Mostly, it's all through Jeppy and Devo. A little bit of Nusi. I had QI. I had the Wildies in there, but they're all junk. Um, People probably hate me for that, but whatever. They're trash. uh,
I was never really a fan of QYLD. I don't know. It just didn't. I don't know.
it has a use case, and for most
Yeah,
people, they don't meet that use case, right?
yeah,
They're older, or they really need that income, and it's kind of like a reverse mortgage, is like how I like to call it. But for me, I'm like, okay, I just need $50,000 to $60,000 of income coming in, right? And then the rest can go into more solid plays, SCHD, for example, and then later on it'll go into like VU or VTI or something like that, right? But for me, it makes sense to have just my basic needs met through notes and through dividend. We'll call them dividend ETFs, right? I'm talking about Jeppy, and I'm talking about Devo specifically, because there's growth there too with those, right? They're more solid than they are with the RYLDs or the QYLDs, the XYLDs,
yeah,
at least in my opinion.
yeah. I think Devo's like more nuanced, sort of, right? Like it's not just a like blanket strategy. I guess it's kind of like
It's a managed ETF, so they
yeah,
really they pick the stocks that go in there. There's about 24 holdings or something in there, roughly. And it's not just dividend stocks. There's dividend stocks in there too, but there's stocks that aren't dividends in there. And then they
yeah,
run covered calls against those positions. They don't normally have a lot on. Like the last time I looked, there was like two on. That was it. So it was pretty tax wise. I mean, it was pretty favorable. It was like, qualified, unqualified, return of capital. God, I always mess that up. And then there was a little bit of capital gains as well. So it meets my criteria, what I'm looking for. Growth, it's going to be a little bit better on the downside because you have those covered calls. And number two, it's also I feel like those stocks are pretty. They're like large cap or mega cap stocks, right? They're not going to go anywhere. You could do the same strategy on your own if you wanted to. JetB is the same boat, in my opinion. It's solid companies, and they're a little bit lower volatility. Plus, you'll get a pretty good return out of it and some growth out of it, right? So I'm kind of doing a hybrid strategy: notes and then income ETFs, and the rest will go in like SCHD, and then I do options and eventually it'll be three separate accounts. Right now it's in two, but so options are definitely a part of my game as well.
what's your like what's your plan for your options? Well, first of all, like when you're hiking or whatever,
For hiking, I just
you're just gonna take everything off.
roll. I rolled some stuff today, even though I don't even call it a roll because I just closed something down and then like kind of just replace that premium with something else. But the plan is to probably just go with lower delta stuff, 10 delta or 0.05 delta or something like that, just to make my job a little bit easier. I don't care necessarily about making the most money, but I'm making something, right? So that's the key right there for that, I think. I have a lot of trial and error of doing different things, and the 0.05 is just so slow, and it's such an amount of, if you're not using margin, which you're technically not using it anyway, but if as far as notational MDBs here, but notional value, the notional value would be super high to get the income that I want. So I'm trying to keep the notional between like 300 to 400K, somewhere around there. So if I had to take it, I'm not going to be going on margin, something crazy amount on margin. So I don't think that the Qs are going to go down much past this 20% that have already gone down. So I think it's pretty safe to go down to a 10 delta or 0.05 at this point, which probably would be like another 10 to 15% down. I mean, you think the market's going to get down there? I don't think so.
No, probably not.
Even if it does,
So,
who cares? Buy it anyway,
yeah.
right?
Yeah. So are you still going to be like trading stuff on your phone
Yeah, be trading stuff
in the
on my
options? Okay.
phone. 45 DTEs, right? So it's not like I
Yeah.
have to babysit it or something.
Yeah. But I have to look at it every once in a while.
Yeah. Well, you know me, I look at it every day if I could. If I got service, I'm looking at it every day.
All right. All right. And I guess what's your plan with that once you're done with the hiking, or do you even know like what your overall like plan is once you're done with that?
For some people here in the chat, because some people may not know what I'm doing or whatever, I am quitting work
Yeah,
April 15th.
explain it.
And then roughly about a month and a half, 2 months later, I'm going to go hike the Appalachian Trail, 2,200 miles. So 14 states. That's my plan. What happens after that, I don't know, because I don't know how I'm going to feel after. A lot of people want to hire me back already. I'm not, even quit yet, but they want to hire me back. I'm like, well, I don't know. I might not want to go back to work. Who wants to sit at a desk after you've been on a trail for 5 months, right? So I don't know. I can't promise I'm not going to go back to work. I have no desire to go back to work, but I don't want to close the door on it either, right?
Yeah.
I don't really need to, but I mean, it's an option, for another year or two. I don't know. We'll see.
Okay. Cool.
Look
All
at
right. Yeah. You said you're going to be on Robinhood. I know how much you like that.
Is he talking about the platform?
I don't know what he means. I guess because it's has a good phone app, probably.
I closed that account a couple years ago. It was junk. I mean, yeah, it's too elementary for me. Like they don't have any reporting or nothing. It's just too.
Yeah.
Yeah, I don't know. It's kind of like it's a beginner platform. If it gets people invested, I think that's really all that matters, right? Like it gets people invested. So
Yeah. Yeah. So I guess you've sort of talked about your like your basic strategy with like your different income funds, your options, your real estate notes. What is your I guess what are you doing with like new money going into your portfolios? How are you allocating that?
So right now, everything with the exception of Nusi is all dripping. So that includes all the individual stocks and all my other ETFs that I own. They're all dripping. I'm still contributing new money, so all my note income, which is like I don't know, $3,500 a month or something like that from note income, is all going into two different portfolios. And then, I'm only going to get like 4 more paychecks. So that's actually just going in a high yields and savings account right now because that's actually what I'm going to be living off of for 5 or 6 months. Not to mention I got a big tax bill that's due. So that's going to go to that too. So that's the plan there. I'm actually front loading my 401k right now, so it'll be close to being maxed out by April, and then HSA you can't do that. It's kind of weird. I kind of learned that you can't front load an HSA, not through an employer anyway. So I'll contribute to that after I quit work, but and
What do you
then
mean you can only contribute like a certain amount a month?
per pay period, yeah. So they take like the max per year, which is like 3650 or something like that. They divide it by 26 pay period or something like that. Plus they subtract out like my job gives me money towards the deductible every year, so you subtract that out as well, right? So I thought I could front load it, but you can't. So that's something new.
Okay, that's interesting.
If you have an HSA, Frank, or whenever you get the opportunity to get one, because I wish I had 100K in there. I've only been eligible for for an HSA for like the last couple of years. But had I, had the opportunity to have one like in my 20s, you got 100K in there. Think about it. You put it all in JEPI, and there's your deductible net right there, just in dividends, right?
Yeah, you have to have like a. You have to be like uh, getting healthcare through your company, right? Or like be on your, not like through your
It has
company,
to be
obviously, but
it has to be an eligible plan, which is a high deductible, what is it? Health plan, high deductible, or something like that. So if you don't work for a company that offers one, if you're on the ACA, like I don't know how you get your health care. I don't know how old you are either. You might be on your parents still. I don't know.
yeah, I'm still on my parents.
Okay. Once you get off of there, you can get on the ACA. You probably make it, you probably wouldn't have to pay a dime, but you just search for one that has a eligible plan that supports an HSA. Um, and then you can contribute to that. And the great thing about an HSA is dividend income, ordinary income, interest income. All that could be used to contribute to an HSA. You cannot do that with a 401k or a solo 401k or anything like that. But an HSA, any income really works.
Okay, interesting. Yeah, I don't really like know that much about it just because I'm like still on my parents' healthcare, so it's like not really
I'll probably, unless I go
applicable.
overseas, then I won't have a plan to actually contribute to it. But the good plan is to continue, at least while I'm in the States, contributing to the HSA until I get to Medicare age, right? And hopefully by then I can have it up to, 50, 100K. I mean, I doubt that'll happen, but especially from overseas for a while, but that'd be nice. I don't think I could even get that close now that I think about it. 10 years, uh, 50K might be doable.
Yeah. Yeah, I think one of the other things I wanted to talk about with you was, I guess, just like real estate. Like, what have your experiences been with that? I know you have some experience.
Yeah, so
Do you
I
have any
flipped homes.
wisdom to share?
Yeah, I flipped homes. I've had rentals. I do real estate notes because real estate notes is just like the ultimate mailbox money. Um, Flipping homes, I made pretty good money until my partner decided to, screw me and lie to me, and because he was trying to do too many deals at the same time with other people, and then he's literally robbing Paul to pay Bob or whatever that saying is. So he's taking money from here and putting it in another house because this house was on delay or whatever. Well, that just caught up to him eventually, and it burned me. Now, you know, flat on my back because I never put myself in a second or third position. I was first position on both properties. I was a lender, right? I was a private lender, so I lent the full purchase price for two properties, and I've done 7 properties, I think. These particular properties I lent on, and I found he was lying to me, and there's a lot of money missing. He took a second and a third out with two more private lenders, right? There's a total of like 100K of money that was missing, and then just got delayed and delay after delay because of COVID, and that just kind of we had fines from the city enforcement because this is all remote, and COVID really just hurt us because I couldn't foreclose on the houses until the eviction moratorium, not the eviction, the foreclosure moratorium was gone. So I finally, you know, filed for foreclosure and went through that process. A year and a half later, finally got the properties to go to auction, and they both sold at auction. All told, I think I lost 7K out of the deal. But if you look at the other properties, I actually made money there. So all said and done, my flipping experience, I've made money, but it probably won't be something I touch again.
Okay. How did rentals go for you? Were you like
Rentals were
very
okay.
involved with that?
I had one out of state and I had one in state, even though I was traveling a lot. I made good money from both renting them out plus appreciation. So, what really pisses me off is when I sold the house in 2019, the very last one. the house went up like another 200K 2 years later. That's just my luck, you know. I still make good money though in either property. Rentals are just not for me anymore. They're too much work. It does, and you know, I made a video about this. It doesn't matter whether you have a property manager or not, right? The house that I had a property manager on was 40 miles from me. I had more problems with that house with a property manager than I did the house that was 1,300 miles away from me, you know, with no property manager. So property managers just they don't have your best interest. Um, it's just not something I'm going to deal with anymore. I just want to be in stocks. It's liquid, and now there is some benefits to being in some real estate because the leverage factor of real estate. You could kind of do that with stocks, but nobody really does, right? Going on margin. Nobody really does it, but you know, we're going to get like a 6-to-1 with options. You can do it, but you know, because you're only putting 20%
Yeah.
down. I guess that's 5-to-1. Excuse me.
Yeah.
So, you know, real estate, if you're young, I think it's a good way to go to kind of accelerate your growth. But I wouldn't just go all in there. You know, oh, I got 10 doors. You know, I mean, I kind of like to split it up. Even if I was like 20 years old, I'd still do stocks too, because I want to have a different asset class, right?
Yeah. That's something I'm definitely trying to explore, I guess, but not sure what that will look like for me. And I guess one of the things with real estate too is you can treat it more like a business, and at least compared to like stocks, you know,
You can, but it all
have
catches up to you
those.
when you sell it. So
Yeah,
there is, you
I guess.
know, I always ask people that, hey, you know, you want to go to 10 rentals, right? But you know, look at the long-term exit strategy. There is no good long-term exit strategy, right? Everybody texts, oh, you can 1031 exchange it. Okay, so what? You're just going to exchange it back into another property, right? I mean, there's no good. The only good long-term exit strategy for real estate or rentals is to move into it, live in it for 2 years, sell it, move into the next one, live there for 2 years, and then sell it because you got that 2 5-year rule, right? Which they're trying to get rid of, but in the 1031 they're trying to get rid of too. So that's the really, you know, I mean, so 2 years times 10 houses, okay, 20 years later you're out of them.
What's the 2-year rule?
You live in it for 2 years, you want to pay capital gains on it. You
Okay.
probably have to pay depreciation recapture though.
Okay.
Well, the capital gains that take that back, it's capped. So if you're single, I think it's 250. I
Okay.
could be wrong on all this stuff, but that's somewhere about what it is.
Okay. Yeah, that makes sense. Cool.
So yeah, it cost me like 60K to sell a house. By the time you pay the depreciation recapture, the capital gains, which is 15% for most people, and you have to pay the commissions to sell it. Yeah, it was 60K right there, gone. That was just one house.
Oh, okay. Yeah. Yeah. What, um, what is the, do you know about like, um, how that kind of stuff works with inheritances, or like, if you like pass it on to someone? Because I thought there was, I'm pretty sure with like stocks, like your cost basis is like reset.
Yeah, I think there might be like if you pass it over in a trust or something like that. Actually, Dividend Drip might know more about it. I've never had anything passed down to me, so I don't really know. I know there's like a stepped up cost basis type of thing and all that. I think a trust might shelter it. I think Dividend Drip knows a little bit more about that, but I've never really had an inheritance, so I don't really know the answers to those questions.
I guess that's just like a, technically speaking, that's a way, like that could be a way to exit, but like it's not like practical if you want to exit like before you die. So
No, I said that in the video. You pretty much have to take rentals to the grave, or you're going to pay up the yin yang for it, right? If you've owned rental, if you've had 10 properties for 10 years, 20 years, you're going to owe a lot of money. And there's, like I said, there's no good way to get out of them. Take them to the grave, or you know you're gonna pay up big time to get rid of them.
Yeah. So I guess one of the things that sort of interesting to me is like your um, I guess just like your overall goals. Like once you, at what point did you sort of like solidify some sort of like financial goals, and like where did you um, come up with those, and like how did those change? I guess like you said, you started getting more like you focused on your, or you got a little bit more interested in your finances in like the early 2000s, but you didn't really sort of
Yeah.
start
I'm kind
focusing
of
on
like
it more until recently.
a scatterbrain. I'm not as disciplined as you are. I Number one, I didn't really have any money for a long time, right? So once I started making money and having money, then it became more fine tuned. Okay, I'm going to invest in this, I'm going to invest in that. But to be honest, I've never really invested heavily into index funds or anything like that. I've always kind of like lump summed invest into one ticker or something like that, right? I've always messed around with different strategies and stuff. Now, granted, in the 401k, it's different because that's through work, and I don't have options to do all the stuff I'm talking about. But I'm talking about outside of that.
Yeah.
I always had a brokerage account and invested in various stocks, but I was never a long term holder ever. I'm not a long term holder. I mean, this is actually the longest I've ever held stocks, right? So I've just never been a long term holder. I think that's the way to go if you're in quality stuff, but it's just never something I did, even though I'm going that way now. My biggest loss ever was 30 something K, I think, in like 5 hours or whatever. And I made a video on that. The only account I've ever blown up was a Forex account. Yeah, I blew it up, so I lost $1,500. It's the only account I've ever blown up. I've been through a couple of recessions now. So I think my experience of all the things that I've done over the years, because I've done a lot of different things, just helps, right? It's the same thing with the IT field too. It's the same thing. So, real estate or rentals, notes, flipping, stocks. I've even done silver, and what a sham silver is. It's not an investment, folks. Silver is not an investment. Gold's not an investment. I would almost venture to say it might piss some people off, but crypto's not an investment either. That
Yeah, I
stuff
was
is
just going to ask you about that.
not an investment. So yeah, I mean, go look at Buffett's stance on gold and silver. So listen to him talk about it. That's kind of the way that exactly how I think about gold and silver. I did buy a lot of silver in 2015. I did make some capital gains on it, but it took a long time to make any money on it. And look, it has not gotten back to its 2011 high, right? So it's still a long ways off from that 2011 high. Are we going to get it this time? Are we going to, I mean, that's, 12 years, 11 years later, and it's still not at the high. So what about all those bag holders in 2011?
Yeah. Yeah. Do you I know the answer to this, but is crypto part of your puzzle here, Dave?
It was last year. I made a little bit of money on it. I got into the crypto ETFs. I never
Okay.
got onto like Coinbase, even though I probably have an account there still. But I was doing it in Robinhood for a while, and then Robinhood was just pissing me off because they just couldn't tell what my gains are. Even
Yeah.
after I sold it, I couldn't tell what my gains are. Couldn't tell at the end of the month what my gains were. So I said, all right, I'm out of here. You have to wait till the end of the year to figure out what you have to pay. But so then I just started doing the ETFs, GBTC or something like that. But the problem with those is GBTC. Yeah, I think that's what it was. That's one of them. And there's a high commission on those, so I just stopped doing them. if it ever got back below 30K, I might, dabble in it. But to me, it's not like, oh yeah, this is the thing that's going to make me a 10 millionaire. Like, no, I don't really care about that. Maybe a small portion of my portfolio would go into crypto.
Yeah. Dan
Jerry's
really
right
wants to.
here. Brass is better
Dan.
than silver. You're absolutely right, because if you bought like 223 back in 2005, I mean they're pretty much double if you can find them. So brass is almost a better bet than gold and silver for sure.
Dan said he wants to hear some stories.
I was IT
I don't
in
know what
the
he's talking
military. I
about.
did IT. I supported BlackBerry servers, Exchange servers, web servers and all that stuff. I wasn't shooting. Man.
How'd you get into the military? Or like what propelled you to do that?
I was working nights, and it just, a lot of time not to do anything at night when you're working like, 10-hour nights, 4 days a week or whatever. So I researched stuff, and I wanted to get a clearance. So military is one of the easiest ways to get one. So that's what I did, and went in the military, and that all worked out. Got experience while I was in there. Went up the ladder real quick because I was older, had experience, had education, had certifications already. So yeah, spent a little bit of time in the military, and then got out and doing IT. I've been doing IT since 2000, actually. So even before I went in the military, I was doing IT as well.
What does that what does that look like when you're just going in for like a sort of like a non I guess like combat role?
So the
How does that
chair
work?
force, nobody goes in the chair force for combat. If you want to go combat, you go Army or Marines, right?
Yeah.
So, but most people, when you ask, "Oh, you're in the military? Yeah. What branch?" I was in the Air Force, right? Did you fly planes? That's the first question they always ask, right? No, I was supporting, all the base communications or whatever.
Yeah.
I mean, electronics. Yeah, I mean, that's always the first question they ask. No, I wasn't. So what? Am I unattractive now?
Yeah. I think my brother is like, I mean, I guess it's kind of the same thing. He's in the army and he's trying to fly helicopters, and it's like, wait, I thought Air Force is flying. What's going on there? But
Helicopters is like
most of the
normally
helicopter
Army.
stuff, yeah,
Yeah, it's normally
exactly.
Army
It's
usually.
just funny.
Yeah,
Yeah.
it was a good experience. I didn't stay in long. I actually got out early because it was an overmanned career field. So I went into reserves when I got out, and then got a job at a data center supporting, I don't know, 6,000 systems on 2.5 acres of data center space. And then it just kind of, they pissed me off, and then I switched to a defense contractor. Supported their SANs storage area network, and then I moved on from them to a different company, and then moved on from them to another company. I've never, over the years, I really haven't worked for a lot of companies, actually. I think maybe 5 at the most in my entire career. So IT is very good, Frank. Pays good, and then you always have a job.
He says he subbed because I thought you flew F-35s.
What's an F-35?
Yeah, I don't know either.
That's probably like the new, they had, what did they have? Their trainers. I was on Beale Air Force Base, so I was in California. We had the U-2 there. We had the Global Hawk was there, and then the trainers were there as well. Yeah, I know dividend rip. All 4 branches fly, but we're talking about T-38s. We're talking about helicopters in general, though. Yeah, T-38s. So I've seen some interesting stuff when I was in. I deployed once, and I've got to see kind of for how short of a time. I think I was in like a little over 2 years, and then got out and did the rest of the time in the reserves, like 2-3 years in the reserves or something like that. I saw quite a bit of stuff and got what I wanted out of it. So
Were you did you like work somewhere overseas like after you were in the military, or was that just when you were in the military?
no, I did. I did a
Okay.
job out in Kuwait for a while. Did a job in Qatar for a while. Qatar.
Okay.
Um, two almost 2 years in Qatar actually. So as a defense contractor, got paid
Okay.
very well. That's kind of what actually made me step up my savings when I got back, because I'm like, if I'm saving, X amount of money while I'm here, which housing's paid for, cell phones paid for, cars paid for, food's paid for, gym's paid for, and the job is a 2-minute walk from my where I'm living, right? I banked everything, and they give you a 15% uplift. They give you COLA. They give you housing. They give you food allowance. They give you all this stuff, right? So I had no bills, but they're paying me for everything. And that's what kind of, I paid off the car. I paid off part of the student loans. And when I got back from overseas, I'm like, it was hard to go back to being like, it was a lower income, obviously, and had more bills, but I remained ever since then, even to this day, right? I live in Denver, right? My bills right now are like $2,500 a month. And it's been like that since the day I got back. I've never had a car payment since 2005 or 2009, excuse me. I live super cheap and I bank everything. That's key, I think, if you want to fire in 10 years.
Yeah. Um, at this point for me, it's just like hard to get a grasp on like what I'll really need. Um, but it's sort of just like try to save and invest as much as possible and then see where that ends up.
That's a double-edged sword, though, because you might try to save more than you make. You know what I mean? Like that's how obsessive you can get with it. Like I'm gonna eat freaking ramen for 2 years straight or whatever, right? You can get very
Yeah.
obsessive with it.
Yeah.
I'm lucky enough that I was really in a position where I never really felt like I sacrificed, because I made good money doing what I do. So I was able to save 60 to 70% of my take home pay, plus save a bunch of money in the 401k, but never felt like I sacrificed anything.
Yeah. And that's something like, at least at this point, I think I have like people around me that will like bring me away from that tendency to get too obsessive over it. And
Well, you're young, have fun while you can, but
yeah,
you're still way ahead of most people your age. I mean, you're blowing them away.
yeah, maybe cracking a white claw after this.
Literally started with zero net worth till I was age 35, I think. I think it was 35. So it was in 2010. So yeah, 35 years old, zero, right? You're how old, you're gonna have a way bigger freaking cheddar. You have more cheddar than I'm gonna have at my, the same age, right? Let's say Matt Money's the same way.
Yeah, he's doing pretty well.
Yeah, he's like just 30 or 31, I think. So, with like practically, $1 million, right? So
Yeah,
way ahead.
yeah,
What you're going to end up finding is once you get money like that, it takes a long time to get there. Once you get it, it opens up a lot of doors and options, and then you're going to run into the issue where it's analysis paralysis, or I don't know which direction to go because I'm trying to go too many directions at the same time, right? That's what you're going to end up running into. I got too many options. Matt Money's running in that right now. I could go over and live in Thailand. I can retire right now, right? So he's running in that right now.
yeah. That's a good point. Uh, my dad's always like telling me to be more decisive and less like, I don't know, just
Yeah,
be
decisive.
better at making decisions.
It's just once you get to that level, it's easy to become indecisive because it becomes where time is the limiting factor then, right? It's not the money, it's time. Right now, my issue is time, right? I'm getting older, my eyesight's starting to go. I need to get the AT done. Time is the limiting factor. It's not the money at this point.
Yeah, that makes sense.
No, I'm not drinking White Claw, Darth. Darth probably bought some SPHD today at AGNC.
AGNC. It's an interesting one. It's like it's just like almost painful to like go back and look at like what I was investing in like a year ago or like 2 years ago. It's just funny where I
Yeah, you're way ahead of me, man. I mean, way ahead. So, I mean, Matt Money's way ahead. Darth dividend drip 10K a month, new goal. I mean, yeah, if you want to blow up your account just to get to the 10K a month goal, I mean, you know what I mean? I mean, what I mean by that is it's all going to QLD to get the 10K a month. I just wouldn't do it. That's just me.
yeah.
I have a little bit more discipline than you do, dividend drip. Just shots across the bow. He made fun of you at 5K? You can live a
Yeah.
happy life at 5K a month. That's like double what I live on now.
Yeah. Darth Dividends asked about ADC. I don't know if I've heard of that. Some
Uh,
REIT.
is that the?
He's into so many REITs.
He's just he likes reads, so he's all on
Yeah.
his balls deep in them.
Yeah.
Yeah, I hold Pepsi.
Yeah. Pepsi's solid.
Yeah, more so solid than Coke is.
Oh, I was gonna ask you about your um like your covered calls and all that. Like I don't know when it was, maybe like a year or two ago, you had a bunch of like you had a bunch of different stock positions and you're like selling covered calls on a bunch of them and you sort of scaled that back. Was that just because of like the time commitment or what was your
It's hard to manage.
thought there?
You got 30 positions. You're doing cover calls now. Granted, you can't do cover calls against all of them because some are just junk to do cover calls against. But the
Yeah.
Apples, the Microsofts, it just became too much work, especially when it was like 2020, 2021, when the market was exploding. It just run past your strike, right? And then it's like, oh man, now it's like, what am I going to do? Am I going to roll it out, roll it up? Am I just going to take the loss on, I mean, it's not really a loss, right? It's above cost basis, but it's just the break even is just became too much work. So that's when I went to VYM. Right, I was pretty deep into VYM. I was selling cover calls against those, like 11, 10 contracts. It worked out for a while until it just blew past my strike, and then, well, there you go. It's going to realize a bunch of capital gains on VYM, in which I had a lot of capital gains in there. And boom, can you imagine realizing 40, 50K of capital gains right off the bat like that? Short term, by the way. So yeah,
Yeah.
I just got out of it. And then now I just let the ETFs do it for me. I still do options. It's a major part of what I do for my strategy. But when it comes to like covered calls against my dividend portfolio, it was too much work to do that for me anyway. I'm still doing like QQQ covered calls in the Solar 401k, and then I'll do SPY cover calls in the IRA when I roll that money over. But it's just one ticker. It's a lot easier to manage. In those retirement accounts, who cares if it gets called away, right?
Yeah. I guess I really have no knowledge of this, but what's a solo 401k? Like, how does that work?
There's kind of like a coin name for the new one. I don't know what it's called. PD uses one, and I think Invest to Retire does as well. I think it's just a coin term for Solar 401k. Well, really, what it is you have a business, which technically you kind of do. You might not be making any income off of it yet, but once you do, off your YouTube channel, you could actually, your business, because I'm assuming you open an LLC eventually, your business can sponsor opening Solar 401k, and then from that business you can contribute to the 401k, basically Solar 401k.
Okay.
And there's some benefits there, right? Because the reason I did a Solar 401k originally is I was using my LLC from the flipping to open it, sponsor it, is I got some real estate notes that are invested in the Solar 401k, right? I just took money from an IRA or a 401k, rolled it into the Solar 401k, and then I uh, I invested into real estate notes there. You could flip homes, you can do a bunch of other stuff there. So it's very similar to like a self-directed IRA, except for with a Solar 401k, there's a lot more benefits to it.
Okay. Interesting. Yeah. Might look into that at some point, I guess.
Oh yeah, I
See.
would definitely look into it because if you have a lot of money and YouTube money coming in, I mean, you just going to pay taxes on it, or would you rather stick it in a Solar 401k and then, you know, obviously if you have a W-2 job, then you can't do both. So you kind of have to mix those a little.
Yeah.
You can do both. You just can't get the 19.5 or 9, or I think it's 20 something $1,000 this year of deduction.
Yeah. MDB says he has a TNA covered call. I don't know
Yeah,
why he'd have a covered call, but guess
we
he
talked about
get
this
assigned.
on last Thursday, I think.
Yeah. Okay.
I don't know what you sold your. Oh, it's at 63. Oh, wait, sweet. When does it expire?
Today expires Friday, I think.
This Friday?
Yeah, I guess.
Yeah, it was assigned. Yeah, I mean, just hope and pray that's above 60 by Friday close.
Yeah. I mean, it went up like $4 today, so it's just like,
Yeah, market had a pretty good update today.
yeah.
I rolled some stuff out, opened some new stuff. I actually rolled it down and out. So I technically took like a 4K loss today, but it's really just pushing the gains off because
Yeah.
it's not that bad. Yeah.
Yeah.
You just, I think Powell's kind of what made the market go up today. So
Yeah.
you're probably good. I mean, if it expires this Friday, I think the 16th, is it the 16th? Yeah, the 16th, I think, is the FOMC meeting. So I think you're good all the way at least till then.
Yeah. All right. Well, I need to get going right about 8, so probably gonna call it here in a minute or two. Dave obviously has a YouTube channel, has 2 YouTube channels actually, so um, everyone should definitely go check those out. I think I have the links down there somewhere in the description. Yeah. And if you want to plug anything else, go right ahead. And
Well, I appreciate having me on, Frank. I know we've been talking about this for the last few weeks or so. I was busy one week and then I was traveling the other week. And so I appreciate having me on. I mean, you're definitely an inspiration to these younger kids for sure. I think you're more disciplined than a lot of them are. A lot of them just get up, they fall for the hype, right? They fall for the hype of getting into, you know, Nicola, Hyliion, NIO, or just, really kind of junk stocks, right? Like of course you've done some of that stuff probably too, but
yeah,
but you're also a little bit more disciplined than I'd say, but than some of those most kids I'd say. But so just stick it out, I mean, you have a good career ahead of you too. It's been, ITs. I mean, you should have a job the rest of your life. It's almost like being a nurse, really. So you're just a nurse of IT systems, really what you are. So yeah, I appreciate it. If you ever want to do it again, if I'm ever available, I'll shortly come on.
all right. I definitely appreciate you coming on. and talking about your experiences. I think there's a lot of good stuff here that people can learn from, I guess, and just get a idea of some other uh, types of investments that I guess I don't talk as much about. So yeah, thanks a lot. And
I what was I going to talk about? Darn it. Yeah, you can always, either reach out to me on my investing channel, or you can shoot me an email or whatever. Or I usually respond to Instagram or Twitter or whatever, but sometimes it's slow too. But I'm usually pretty responsive. So
all right, thanks.
cool. All right, glad everybody here.
I should have a video out this Saturday, and not sure if I'm going to have a stream next week or not, but I'll keep you guys updated. So thank you.